Before we begin, a quick disclaimer. This podcast is for entertainment and information purposes only. It should not be relied upon as a base for any investment decision. For solicitation or to buy or sell any security, either the host, guests, or clients of either may own securities discussed on this podcast. Welcome to the Special Situations Cast. I'm your host, Bram de Haas of the Special Situations Report. Today I have a very special guest in Lobo Tiggre of the independent Speculator.com. Lobo, first off, can you maybe tell us a little bit about yourself, how you got into the precious metals industry, I should say, and maybe also how you when you started your company and what it's about.
Okay, wow, there's a bunch of questions in there. First, thank you for having me on the show. I appreciate the opportunity.
Thank you for coming.
And yeah, I would say I got here honestly by being the black sheep of the family, being an atheist, anarchist, rabble-rouser. I hung out with disreputable folks like the infamous Doug Casey. He's a well-known globe-trotting speculator and hard money advocate. He's also a well-known libertarian anarchist, and so we got together from like-minded political philosophical reasons. And in 2004, he was taking his investment newsletter and turning it into a proper business, and he wanted some help. And he knew me as a writer. I didn't know anything about mining or stocks. I didn't know what a warrant was. But I could write, and he needed help, and he trusted me. So that's how I started, and I just learned and learned and learned. Wasn't too long before he was asking me for input on some of his investments, something I was very proud of. And I worked with Doug for 14 years, just about almost 15. And then the business had become large and corporate, and in 2018 I decided to start my own shop. That's the Independent Speculator, named in honor of Doug Casey's International Speculator, with his blessing. So maybe not the typical answer. I'm not actually a geologist. People mistake me for one all the time because I've been kicking rocks for many, many years. And I'm not a financial type. I don't come from Wall Street, just a writer. But I've learned a lot about rocks and stocks along the way, made some money, and I'm doing my best to share what I've learned with people who are interested.
Yeah, no, I think that's great. I think it's the best background. If you have an unusual background and you're still here, that's something. And I wanted to ask you, just out of curiosity, were you a political writer because you shared these political views?
I wrote articles for something called the Libertarian Enterprise. I wrote articles under different names, other publications, and some business reviews, always pro-business. My thing is really the free market. I'm not so big into many of the other issues, but I'm very hardcore advocate of the free enterprise system. And that's where the precious metals, as you call them, come into that. I think of them as monetary metals. Gold and silver have been used as money. There are other expensive metals that you could call precious, but other expensive metals that you could call precious, but they were never really in circulation as money. And I think that does make gold and silver special, and it impacts, their trajectory going forward. So yeah, I did. I wrote a novel, actually. It was about the Y2K scare, if you remember that.
I do.
It was a very political novel about the Y2K scare. I wrote back in '98. That was a lot of fun, and other things.
Cool. So, and were you also always a bit of an investigator for those articles? Because I think that's really useful skill for investors.
Yes, I have to say, when I was younger, I don't know if I crossed any serious ethical lines, but I didn't always maybe fully disclose what my interest was. No, I shouldn't say maybe. I want to be honest here. I did not always fully disclose what my interests were as I researched stories, and people would tell you things they wouldn't tell you if they knew you had a hostile view to what they were saying or doing.
Can you give me an example? Because it's maybe worse if you just put it out there and I don't know what you mean.
Well, so once I was looking into something about school vouchers, and I talked to somebody who was a public official in the school system about the competition from the private schools. And I just said I was a business writer, which was true, but I didn't say that I was specifically, ideologically aligned with the pro-market side, and that I favor private schools. I like the voucher system. If a parent's going to have to pay taxes to send their kids to school, they should have some choice as to where their kid goes to school. And if they choose to send their kid to a private school, then, if some of that money goes with the kid to the private school, that seems fair to me. I didn't tell the person any of that, and they probably wouldn't have told me half of what they told me if I had. On the other hand, I didn't lie. So that's why I say I'm not sure I crossed a hard ethical line, but I wouldn't have liked it if the shoe was in the other foot. And as a human being, that matters to me. And I try now to be, very straightforward. I tell people exactly where I'm coming from and what I think. And if they don't like it and they don't want to talk to me, then that's fine.
Cool. Yeah, and Galaxy Far Away once studied journalism, and I was raised very old school, like that, as if there were clear ethical boundaries. And
let me jump in and tell you one more
yeah,
thing. And
sure.
this one I'm not unproud of, because when you're not unproud, there's a double negative. When you're dealing with somebody who is hostile and has an agenda, and maybe, at least in your opinion, you think that agenda is bad or negative, you're sort of in a war situation. So it's okay. It's fair to fight back if you're facing an opponent. And I did once talk to an ecological action group of extreme nature in Ecuador. And at the time, I had very long hair and I was wearing a black leather jacket. And I said I was a journalist. I did not lie to them. I didn't mislead them, but I just said, I'm a journalist. Will you talk to me about what you're doing? And they looked at me and they assumed I was one of them. They told me, they told me things I should have never told me. But, I knew which mining projects they were going to oppose. I knew that they were paying the village elders in those areas to oppose those projects. They had a very coordinated, almost military style campaign in opposition to mining there that had nothing to do with the well-being of the people in those towns or communities, and had to do with their ideological goals. So in that case, I didn't feel bad about it at all. I did not lie. They made an assumption. I did not disabuse them of that assumption. And that information proved to be, very valuable to me and my readers as investors.
Okay, so that was later, and this is the kind of things that you do to get like an edge in the market of precious metals, that you actually visit.
It would be very romantic for me to say, yeah, I'm undercover, I'm super edgy here.
Mm-hmm.
But the reality is right now that no, the closest I come is my in the pit interviews, where CEOs say, hey, I want to tell you about my great company. And I say, okay, you can tell me, but I'm going to ask you hard questions. If you're okay with that, you're welcome on the show. And I grill them on my In the Pit series, which is available for free on YouTube. If you look for Lobo Tiggre and In the Pit, you should find them. So none of those guys paid to be there. That's not paid promotion. They just said, hey, I want to tell you my story. And I said, okay, you can tell me, but you got to face the music. And I asked them the questions that I think investors should ask.
Yeah, no, actually, that's one of the reasons that I invited you, because I watched those, and you're real pretty critical, and you invited like someone who's kind of involved indirectly with something I'm invested in, and that was super interesting. And you were raising questions I didn't think of, and it was really interesting. So I'll just finish my little story about when I did journalism way back when.
Oh, sure.
We were supposed to be like super objective, but later, and I think it was with the rise of Huffington Post, it's like a great example, that things really, the pretense went away. Like before, I think real journalists would really strive to be objective. But I think today we're realizing more and more how impossible that it really is. Because, it's...
I agree. I would go farther. I don't know how far in this direction you want to go, but I think it's an active danger. This pretense of objectivism, sorry, not objectivism, that strikes of Ayn Rand. This pretense of objective coverage, it was never really true. You always have your own biases, and the New York Times, for example, it's the classic, example, always held out for so many decades as sort of the most impartial. But there was a bias. There always has been a bias. I always found it was more honest, say, in France, where you had Le Monde, Le Figaro, and these various different news sources.
Right. There's a
And everybody knew this was the
separate,
right-wing rag, this was the left-wing
right.
rag. Like, you knew it, right? And so you understood that's where they're coming from, and that's where their bias is, and you can filter for that. I just think in many ways that's more honest, because it doesn't pretend to be something it isn't, and if you know that, then you can adjust for bias and try to triangulate between them on the truth.
Right. Yeah. Yeah. It's internet just changed everything, and we'll just have to deal with it. Happy I don't have to make the rules. But let's get into your investment style. I'm really curious. Yeah, how would you describe like your investment style, or how do you get to the gold and silver companies that you like to invest in? I think you also like some other companies, but
Sure. All right. Well, so broadly, first and foremost, I have to state up front, I am a speculator. And I know that in some parts of the world that's considered a bad word. Those speculators corner the gasoline or something before there's a disruption. And but even when that's true, even if a speculator corners gasoline and then sells it at 10 times the price when there's no gasoline, well, that speculator is actually serving the market in its time of ultimate need. So I'm not even sure that I would call that a bad thing when they do that. But that's not exactly what I do. I don't hoard anything for difficult times. Ultimately, the difference between a speculator and an investor is that an investor deploys capital for an expected gain, and you do your best to measure that and minimize any risks or surprises. A speculator is guessing about the future, is thinking about trends and thinking where money will flow, not where money is flowing now, where can I expect the money to continue providing returns, but where will money go, and placing yourself accordingly. So just want to get that out there. The name of my publication is not the Independent Safe Investor or the Independent Sure Thing. It's the Independent Speculator. And why would you want to do that? Why would anybody want to take the risk of being a speculator? Well, of course, if you get it right, then your gains potentially are much greater than on safer investments. On the bottom of any of my web pages, there's a track record button. You can see that the current average gain of all my closed trades, this isn't cherry picking my favorite ones or the best ones, it's all closed trades, is currently about 40%. So, it's not, thousands and thousands of percent, but you have some big ones, you have some losses, right? And the average, I think, is what really matters. At the end of the day, a method is not about the best result or even the worst result. It's about, what does it do over time? What is the average result over time? And I have found that as a speculator, not a wild gambler, but as a cautious, disciplined, rational speculator, I can do much better than just sticking money in the bank and getting a few meager percentage that may or may not even keep up with inflation. As far as how we get from there to the specifics, one of the best and surest ways to think about the future is to look at public policy and assume that governments will do the wrong thing. That's as close to a guaranteed outcome as there is in the universe, is that governments always do the wrong thing. They're always going to, in the case right now of many of our investments, it's clear that the Federal Reserve in the United States is going to throw the dollar under the bus. The priority of its dual mandate of full employment and stable prices. Oh, we're not worried about stable prices. Inflation is fine. It's okay if it runs hot. Now we have a symmetric objective, right? So it's clear the priority is on the jobs. That means the dollar goes under the bus. That means higher inflation. That means lower real rates. That's bullish for gold and silver. That's a very short synopsis of this current situation. Broadly speaking, generally
The,
speaking, I just think we see, despite the COVID situation right now, afterwards, I think the outlook is very inflationary. That's bullish for all commodities, all natural resources, and especially bullish for the monetary metals, gold and silver.
and have you so this sounds like you take almost a top-down approach that you review the
But yeah, well, I try to look at the real world, see what's happening instead of just saying, "Oh, I'm a gold bug." So
yeah.
where's the reason for thinking gold's going to go up,
Yeah, so could
right?
you envision yourself like shorting precious metals or
Yes,
okay.
yes, I could. But shorting, no, and certainly not the metals themselves. The actual bullion that I can hold in my hand. I view that as savings, and I've actually had experience in my life once where bullion I saved silver coins. Actually, I saved as a boy. Fed my family at a time of financial disaster because they had silver in them. When everything else was gone, I could liquidate my silver bullion and feed my family. That actually happened to me.
Okay,
Um,
and when
so,
was this? Or yeah, I'm
well, the
sorry
coin
because I was
collection was when I was a kid.
okay.
The disaster was around 1999, 2000. I long story, but I thought I had a new job, quit the old one, was en route to the new one, then suddenly the new one went away, and what do you do? Um,
And
but
oh, no, no,
sorry.
no, please continue.
So my point was, I can't see shorting gold or silver. I mean, that's physical wealth, and okay, the prices go up and down. I don't even care. As the often cited statistic is, an ounce of gold would pay for one good suit this year, 100 years ago, 1,000 years ago, or some 100 loaves of bread. It's gold is always worth something, and it's a financial asset for which there's no counterparty risk. Right, your long is not someone else's short. So, for my personal peace of mind, I feel comfortable uh, solidifying, realizing gains and profits into long-term savings as bullion. And by the way, it's a great discipline because if I have savings in the bank account these days, there's no difference between savings and checkings account. I can dip into my savings just because a new music album is on sale and I want to buy it or something. Whereas if I had to sell my gold, that would hurt. I'd have to physically do something and move it somewhere.
Right.
So it's very good discipline to keep your savings from being squandered on unimportant things.
Okay, that's a good. That's a
So
good
not
point.
short that, but to address your question, if I thought like it was 2011, 2012, and we're going to look at a multi-year bear, absolutely, I would sell. I don't know if I would short the stocks because you have to get the timing right as well as the direction. But I would go short, if you understand what I'm saying. I would look for other investment areas.
Yeah. No, no. Like that's what I wanted to know. So it's interesting because you've been in business for maybe now 20 years.
Yeah,
Or
well, I started with Doug in 2004, so it's
okay.
17 when I started in this
Yeah,
area.
because it's kind of one monetary regime, so it wasn't really I mean, you can legitimately be like long gold and silver all the way through, right? And it
Yeah.
still makes
Well,
sense. Like,
to be fair, I would do some things different. I mean, I worked for Doug at that time, and so there was what you could loosely call the Casey consensus. And I was never told what to write about or what companies to pick. I mean, after I learned how to do the business from Doug and how to research companies and to pick stocks, they basically turned the main letter over to me and I wrote it. It became my letter. Um, but if Doug is bullish on gold and silver, I'm not going to be bearish on gold and silver in the letter on under his company's name. So after 2011, 12, we went into we have to admit we went into a bearish market, but Doug was bullish throughout, and he had a very long-term view, which ultimately will be right. But for many years, I don't think I don't think we served our readers as well as we could have, adapting to the market realities of the moment. So, again, I'm not trying to throw Doug under the bus. Longer term, I think he'll be right. But it is my intention with my newsletter that if the markets turn, I'm not going down with the ship. I'm, I will implement stops. I will be looking for what is working rather than clinging to something that is not working.
Right. So yeah, you've got this long-term macro view, but you're also more mindful of like what happens in a 3 year or 1 year time
Sure.
frame. Sure. Okay, that's interesting. But then you could basically just buy an ETF and call it a day, if that's your
You
strategy.
could, but that's trusting somebody else to make your picks for you. Though
But like
honestly,
in an ETF, there's like no picks, right? It's just index of.
well, no, but that's just it. So if I buy the GDX or the GDXJ, right, to
Mhm.
get leverage on gold via the miners, well, I'm trusting those guys running that fund to pick the best gold companies that are in that. I don't trust anybody to do that better than me. So arrogant as I am, you could say, I'd rather
Sure.
make my own picks. And that said, if I didn't have time, I mean, I don't do anything else. Well, my wife, well, she probably would agree that I don't do anything else, but I try to spend time on family and work, and that's pretty much it. So I've got my screens going all day long. I pay attention 24/7 almost. The weekends I work because the markets are closed and I can write without prices changing on me. I'm paying attention to this all the time. It's what I do. But if I didn't, if I had some other job and could only pay attention on the weekends or every once in a while, maybe the ETFs wouldn't be a bad way to go. If I accept a certain thesis, I like uranium now. So okay, there's an ETF that's can put me in uranium companies, or there's something that's not exactly an ETF. There's a company that just owns uranium, so I can bet on uranium without poisoning myself with radioactivity. That's fine for people that don't have the time. Personally, I think I can do better by my own due diligence on the companies, researching in, digging in, and finding the ones that I think will deliver best for shareholders.
And now I'm so curious. How do you differentiate or between like what are good precious metals miners and which ones you want to avoid? Are you
Well,
like a very concentrated? I think you do few picks, like you do a few a year, or
yeah. My criteria. Okay, so what I do in the letter is one thing, but to answer your question about how I find them is another. Uh, the second one is easy to answer. Basically, the newsletter is not a theoretical portfolio or a model portfolio or here's what you might do or might be. It's actually my portfolio. In the main newsletter, the Independent Speculator, it's stocks that I think these are great enough speculations that I'm willing to put my own money into them. And if I'm not willing to put my own money into them, it doesn't go in the portfolio. That's the primary core value of that publication. I research many things, but that's it. And you can't put your money in everything, so you have to be selective. And that is broadly applied to everything. And I'm not just a clone of Doug Casey, but I have to give credit where due. And he taught me. And one of the things he taught me was originally at the time, it was the 7 Ps of resource stock evaluation that became 8 and then 9 Ps now. But if you look up 7, 8, or 9 Ps and Doug Casey, not me, Doug Casey, you'll find a free report out there, which is basically the Casey method of the very critical, these Ps, starting with people and then property and politics and so on. It's a formula, it's a checklist of things to make sure that are right and in your direction when you make a resource investment. And we probably don't have time to go through all the P's. I have my own sort of version of that, but that's the method I learned.
yeah,
It works very well. And the first one is absolutely people. And the best project or high grade discovery can be screwed up by the wrong people. I have been doing this now, as you say, for quite a few years. And there's white coming into my beard. If there's people who've lied to me or consistently failed for shareholders in the past, I'm just not interested. There's no point in even going there because anybody can tell an exciting story, but the wrong people, they have anybody who has a track record of losing money for shareholders is somebody I'm not interested in doing business with. If I get past the people test, then I start looking into the other P's. And one more thing I would say is
So
there's a
it's a lot
difference.
of new people surviving, or
I'm sorry, what about new
so
people?
like a lot of first-time CEOs surviving your checklist, or
Well, they'll have, yeah, it's a fair point. I would prefer to do business with a company where the guy's done the same thing, or gal, you know, and I mean the same thing. You know, if they're looking for gold in Quebec, I'd like to see somebody who has found gold in Quebec, not somebody who explored for uranium in Argentina, right? But you have to start somewhere. And if somebody is relatively young, but they worked with winning teams before, you know, that's okay. It's not a fatal cardinal sin to be young. But you've probably seen there's some interviews I've done where I get on the camera and the guy's really young. It's like, wow, how did you get to be CEO? Can you shave yet?
is that?
So
But that is it's that's quite common occurrence currently. That pretty young CEOs. I mean, I think early 30s, like early 30s of.
that's actually symptomatic of the whole industry. You had for a long time, everybody had white hair, and none, young people, you know, they weren't interested in geology, or if they studied geology, it was to save the earth from global warming. Sorry, we can't call it global warming anymore because people are freezing because of it, so we have to call it climate change. You know, so it was very odd, and there was a serious concern in the industry, all the extractive industries for some time, that there was going to be a lack of talent. There wouldn't be any people because, you know, mining schools were shutting down, or you know, famous schools of mines would have a matriculation of like 5 or 6 students or something, right? Just not enough people coming in. And now I think really since the meteoric rise in the early aughts, right? You know, the big, not just gold, but the previous big cycle up for commodities. You know, a lot of companies made big discoveries. There were headlines. People made money. Geologists made well, and younger people, you know, they're not stupid, right? They can see where geologists are making money, and you know, it's kind of fun to be involved in a big discovery. You know, so actually, you go out now in the field and you see a lot of silver hair and a lot of black hair or blonde. You know, like there's not so much in the middle, just like silver or no hair, and they're teaching the young guns over here.
Like everybody.
So yeah, we are seeing more younger people in the business, and that's great. It's great for the business.
Yeah, you know, yeah.
Yeah, but I'll tell you, you know, if I had money to put into only one company, and there were 2 equal choices, and one had a CEO with decades of experience, and one was a young buck,
Yeah.
and there was no other difference, I'd go with the older CEO. Sorry.
Yeah, but, and how do you think about failure? Because well, I definitely invested in some companies that failed at things, and not necessarily just precious metals. But it's also a great experience. Just things you won't do again.
Yeah.
So how do you think about that?
Well, I certainly have had my own failures, and the very, you know, pain is an awesome teacher. You know, I'm not making that mistake again. And particularly if you see a pattern, there's an essay available for free on the website, independentspeculator.com. I think it's called My 2 Greatest Mistakes and What You Can Learn from Them. And there was a commonality between 2 of my biggest losses ever, like the worst outcomes of speculative calls that I made had a common thread. And that was building a mine without a full feasibility study. So it's not that it can't be done. And in some cases, you know, a very small mine where you'd spend more money on the feasibility study than the mine is worth, I understand the argument. But my personal experience is that my biggest losses came from backing guys who's made an argument like that. Oh, well, the feasibility study costs more than it's worth. You know, we can see it and we know it's right there, blah, blah, blah. Right. And buying into that story resulted in catastrophic investment outcomes. And so yeah, that's
and how
a mistake to learn from.
How
Now,
often do you see a place without a full feasibility study? Is that common,
comes up,
or
it comes up like I can think of 2 right now that are going on, maybe 3. One of them was a recent interview. I don't want to name names.
Okay.
But that's out there. And I asked them, if you go through my in the pit interviews, there are some people that are building mines without a feasibility study. And I asked them about that. How can you build this? How can you tell shareholders that it's going to work if you don't have a full feasibility study?
Yeah. So, but that's for you, that's a hard no, like true experience.
Yes. And if somebody builds it and it makes a ton of money and I missed out on it, that's fine. You have to have some rules. You can't just go with every great sounding story. And the cases that I can think of where building the mine without a feasibility study didn't work outnumber the ones where it does. So I'm perfectly willing to miss opportunities. As the saying goes, you can't kiss all the girls. So I don't try. I'm happy that my method works more than it doesn't, without getting all tied up in knots over the ones that I missed.
Yeah, right. So, how would you say that knowledge of geology plays into your investments? Because in your interviews, you express like impressive level of knowledge. Yeah, I don't have any, so I can.
I still I understand. It's kind of, you're putting me in a tough spot here, because the honest answer is, of course, it's very important. But at the same time, I don't want to discourage people. Not everybody has time to study geology. And in fact, I've never actually taken a course in geology. I don't have time to sit still. Well, maybe I should have done it during the COVID years. I would have had time this year to go to a university and take a class.
Yeah, but
without interruptions.
Maybe a geology course, it would be like kind of broad, I guess. Well,
maybe an online. But what I was going to say is, I've had the school in the field, right? I've traveled. Normally, I travel somewhere between a third and half the year. I have been to hundreds or thousands of not hundreds of thousands, hundreds or thousands. It's a lot of mines. Mineral exploration projects, development projects. I have kick rocks in the field with truly world-class geologists. People who literally wrote the book. David Lowell or Dick Sillitoe, people like that. And I have learned a fair amount. Even then, I know that there are holes in my knowledge. So if I get to an area, if there's a geochemical issue that I'm not competent to address, doesn't fall within what I've learned, then I'll hire a consultant. Or if there's something in the processing that I haven't seen before, I'll call my friends in the business and say, hey, they say they're going to do this. Does that make sense to you? I've never seen that done before.
Right.
So sorry, I'm not sure if I'm helping here. The more you can learn about the geology as an investor in natural resources, obviously the better off you are. That's great. It helps you to understand the press releases. So by the way, actually, I just invited two friends who are geologists. We recently did a geology Q&A, which is available for free. You can find that on the website too. Because I really believe what I'm saying. I think the more you can learn, the better your results will be as an investor in this space.
Yeah,
that doesn't mean you can't try. That's what I'm here for, and it doesn't have to be me. You can get other people to help you out too.
No, but that's super interesting. And so you'll be better at maybe seeing what companies are not telling you, because they're never going to put something glaring on the slides like this doesn't work.
Yes. Though I can answer that, but even before I go there, let me say that doesn't mean you shouldn't ask. And I think it's very important to go to these investment shows and go around and talk to these guys and meet them. And even if you know nothing about geology, you know a little bit about the idea and the business at least. And if you ask a guy, okay, so how much is your exploration going to cost this year? And how much do you have in the bank? Very basic questions. And the guy says, oh, well, I'll have to ask my accountant to see how much money we have in the bank. If the CEO tells you that, he's lying. He knows how much money he's got in the bank. Or if he's not lying, then he's incompetent. He should know how much money he's got in the bank. So you don't need to be me, or you don't need to be a geologist to ask a question like that. Or if the guy won't even look at you, and he's like, that's telling you something. It's perfectly fine to go with your gut on something. If the story makes you nervous, if it sounds too good to be true, or it's fishy, that's valid input. That's fair enough. As far as is my geology and my knowledge there, it's more like if there's a hole big enough to sail a battleship through, then I can spot that. Other things, it's just a matter of checking the story, right? If they tell you, okay, well, we've got this big vein deposit and we're mining it, and you go in the mine and you see the vein on one level, you go down a shaft and you see that same vein, underneath it, and the next one you go down and you see it. Well, okay, yeah, I can see the vein; it's there, right? Or if you go in and you don't see anything, oh yeah, well, trust us, it's there. That tells you something else. There have been times, I won't name names. There was a time where I went to go see a company, and I had just returned from another trip. I was kind of tired, hadn't seen my kids. And I said, oh, do I really need to see this, or can you just tell me the story? Oh no, you have to see it to believe it. This is great. You got to come and see it. So I go, and it's like 5-star hotel and limousine, unlimited alcohol, all this stuff. And I'm like, okay, yeah, but let's see the rocks. You said I have to see this, okay? So, okay, we put the helmet on and the mining belt, my rock hammer and the light, and we go in the portal, and then we stop. And I want to see the vein, let's go. And no, we can't go any farther. The lawyers say it's dangerous. What? Why did you fly me out here? And I think, I can't prove it, but I think they hope that the hotel and the alcohol and all that other stuff would be sufficient to get a positive impression. So anybody can find that out if you ask, if you try.
Right. Okay. So that's cool. Yeah, maybe not fly out to hotels. And what about no? Let's. I have to move on from geology because otherwise I'll be keeping you all day. And yeah. So I think you're currently more bullish on silver than gold. Is that fair? And why?
Okay, so I'm very bullish on both, but there's a lot here. Silver is more volatile. I mean, you can look at price charts of gold and silver. You can see on a daily basis, gold will be up 0.3%, and silver will be up 2%, or gold will be up 1%, silver will be up 5%, something like that. Happens all the time. So if you're bullish on the monetary metals, well, silver has potentially more upside simply by being more volatile. Now, that same thing also means it's riskier. Volatility cuts both ways. So if I'm more cautious and I'm bullish on the monetary metals, maybe I want to make sure that I'm more allocated to gold. But if I'm trying to make money, if wealth creation is more important than wealth preservation, then maybe I want to allocate more heavily to silver. So I can't say one's better than the other. It depends on who you are as an investor and what your goals are. That said, I am in a phase of my life where I am looking to create wealth more than preserve it. I'm seeking alpha, looking for maximum gains. Silver offers me more upside simply on the basis of volatility. But on top of that, we have basically 50 years of records of bull and bear turns in gold and silver. And silver always, in every case since 1971, when Richard Nixon killed what was left of the gold standard in the United States and freed gold and silver, well, gold particularly, but with it silver, freed prices to move to the market. Every time there's been a gold bull market, silver has lagged below and then caught up. And not only caught up, but more than caught up. On a percentage gain basis, by the time a monetary metals bull market is over, silver has outperformed gold. This has happened every single time since 1971. So far this time around, gold has reached new nominal all-time highs, and silver has barely reached 50% of its previous all-time nominal highs. So we've got the volatility of silver, which if you're a bull is an upside thing. We've got the fact that silver hasn't yet peaked or hasn't reached its previous highs. And on top of that, now we have this whole other narrative of silver is coming back into the fore as an industrial metal. There was this concern when I got into the industry that photography was dying and silver was never going to be used again, right? But little did we realize that more silver is going into the printers people use to print out their photos now than was used in the film, right? All these electronic gadgets using silver now. The Mars rover has silver in it. Tesla cars have silver. And the big one is the solar panels. These solar panels use a fair amount of silver. It's a thin film, but when you've got, millions of square acres of these things, or hectares, that's a lot of silver. So you have the monetary metals argument, inflation, all the stuff that's bullish for gold and silver. You have the nature of silver and its volatility and why it tends to outperform gold. And on top of that, you have silver as a rising industrial metal and particularly and specifically as an energy metal, as part of this new energy paradigm to collect the sun's free energy. So you've got all these different arguments, and you could actually see, I'm not predicting this, but you could actually see gold still struggle until, you know, high inflation 70 style really kicks in. That could be a while, given the COVID headwinds. But at the same time, so you could see actually gold struggle or even go down and silver go up at the same time. You could see them actually separate in a historical anomaly based on silver's role as an industrial and particularly as an energy metal.
Yeah, but so I think that's at the time that silver was at its peak in photography, there was a real demand for it from that side, and maybe mines were getting built still with that idea in mind, and then it went into a real bear market for some time.
But actually, sorry, but that didn't actually happen. I mean, photography has been around for a long time.
Yeah.
But there was sort of in the late 20th century, there was a boom of popular photography, right? It wasn't just professional pros. I mean, in the 1940s and 50s, how many people had a camera? In the 1980s, everybody had a camera.
Yeah.
But you also had after the, I mean, so I don't, long story, but you had governments dishoarding silver before. You know, there was the gold standard, but silver was used in coinage, and gold really wasn't circulated for a long time. It was kept in banks and central banks on deposit, but you had a bimetallic standard, and silver was kept by governments because they used it to make coins. But that stopped in the 60s, and then, but the government still had their hoards. So at the same time, when popular photography was really taking off in the late 20th century, you had governments liquidating, you know, just wholesale getting rid of entire government-sized silver hoards. And so that's one reason why you saw such, you know, really, really low silver prices in the 90s, you know, at the end of the 20th century. You had $4 silver and so on. It was lower than its industrial demand would have suggested because you had government dishoarding.
Right. And how would you say that, like, the supply picture looks like in silver?
Well, I liked it better in supply, strictly supply. I liked it better last year because we were looking at all these economic headwinds from COVID, and I'm not schadenfreude here. I'm not happy about COVID. Okay,
Sure.
but it was what it was, and all these economic headwinds suggested an economic downturn. And most silver in the world is actually not produced by silver mines. In fact, there almost is no such thing as a silver mine. The mines that are primarily silver are lead zinc mines that have very high silver credits. There are some mines that have like native silver metal in them, but those are just limited zones. And most of the silver in the world, actually the single largest source is large copper mines. You have these huge, gigantic mountain-sized copper mines, and only a small amount of silver as a percentage, but the mine is so big that it's just an enormous amount of silver these things come out. That's the #1 source of silver in the world. So what I'm saying is last year, when it looked like we were facing economic headwinds, I could see a scenario where you know, the industrial mines could be shutting down, and that would limit the supply of silver. At the same time, the scary economics would boost the monetary demand for silver, investment demand into silver as a monetary metal. So you could have supply decrease while demand went up and put a price squeeze on silver. Now I have to say that's changing. The light at the end of the COVID tunnel seems to be out there. I know there are new variants and so on, but the commodities prices are telling us that the economy is gearing up for the post-COVID burst, right? You look at copper prices at 9-year highs, nickel prices reaching multi-year highs as well, and iron, you know, even uranium prices are up last year. So yeah. I think that, sorry, just to wrap up with silver supply, sure. I was kind of hoping for a supply crunch. I'm not really seeing a supply crunch now because I think the copper mines are going to crank up and a lot of sources of silver are going to be there. Fortunately, the demand, the industrial demand is also soaring as well, especially with this idea of not just a recovery, but a green recovery. You know, a lot of government money is going to go into the new energy technologies, which are going to consume a lot of silver. So I don't see a supply crunch, but I do see strong demand. And I think there's a chance that we'll see. We'll see. I think I'm not worried about a supply flood. but I don't think it will be a supply shortfall that drives silver prices higher. I think it'll be the demand.
Oh, all right. And so I think gold suffers less from this coupling with copper and
Yes.
lead zinc.
Yeah. There is gold as a byproduct of some copper mines and other mines, but not so much. And its industrial usage is really negligible. There are industrial uses for gold. These fusion experiments that you hear about, they use a golden crucible to hold, a few atoms in the right place.
All right.
But it's not a lot of gold, okay? Apart from jewelry, gold has an industrial use. There is a base case there for its industrial usages, and actually those are growing also every year. But really, gold is primarily driven by monetary and fiscal policy. It is money. It is physical wealth. I'm not the only one who sees gold as something to save in. So yeah, it's when you're asking about gold, you really need to look at government policy more than mine supply. Oh, sorry. The other thing, real quick, is gold isn't really used up in its industrial use. Its main industrial use is jewelry, and it's still there, right, in purified form. It's often said, the statistics are cited that I don't know what it is. Most of the gold ever mined in all of history is still on the surface of the earth in purified form in one vault or another. So the mine supply compared to that is negligible, right? If
right.
everybody decided to sell their gold, it wouldn't matter if no gold was mined for 100 years. There would be more than enough gold, right?
Yeah. So there's a price point where everybody gets their heirlooms and gets them.
Well, right. But oddly enough, that doesn't happen so much with gold as with silver. When silver prices go really high, a lot of people will melt down grandma's silverware, go to the pawn shop with these old silver trinkets and things and turn them in. Gold, it happens, but not so much. A lot of people seem to get that this is long term. This is something that you want to hold on to.
Maybe the changes aren't as volatile or not as huge, so maybe that plays a role. And before I'll ask you some more questions, but you did a really cool report recently on why you like mines that are in a PPSS stage. Can you maybe tell us a little bit about that? Because I thought it was really interesting.
PPSS stands for pre-production sweet spot. I did not coin that term. It's something that existed already in industry. My claim to fame, as it were, in this space is, as far as I know, I'm the first one to actually measure the gains that a stock typically delivers during that pre-production sweet spot. Now, we're not talking about an existing mine or building a new mine. That's just growth, organic growth for that company, which is good and usually rewarded. We're talking about a company that is an exploration company, makes a discovery, and now they build their first mine. And there is a change in value from spending money, literally pouring money down holes in the ground to try to define a resource, to pulling money out of the ground from your mine. It makes perfect sense that there should be a change in the market's valuation from that transition. But it's so obvious who's building a mine that the conventional wisdom was that the gain wouldn't be very much. It's known in advance and it's priced in. And when I started asking about it, I asked my mentors, and not just Doug, Rick Rule, some of the other people that I knew and respected in the business, and nobody really had a hard number. They thought, maybe 10, 20%. So I researched it and I gathered examples. And it turned out that the number, my original number was close to 150% between a construction decision and pouring your first bar of gold or your first plate of copper. And I said, no, that can't be right. That just, that there's something wrong. There's only a couple dozen examples that there's skewed data. So we went out and we got twice as many examples, and it came down to like 120%. But it was still more than a double. I was gobsmacked. So we researched more, got more examples, and it was still over 100%. I've now done that research 5 or 6 times. I have about 120 companies in the database now. And the average is still on the order of a double in the stock between a construction decision and a first pour. So it's not just 20%. It's a lot. And here's the key. sorry, just here's the key point, and you can ask me any questions about this that you want. The key point is that most people who set out to build their mine do. It's not like a discovery that may or may not happen. It's not, like a biotech thing where you may or may not get an FDA approval. You're building a mine, and you don't start building a mine unless you've got the permits and the money and a feasibility study, hopefully, that says that it's worth building. So that's what's really making it the sweet spot, is that it can deliver substantial gains, usually in less than 2 years. And your odds of success overall, of the entire data set, your odds of making money are something like 70%. And the odds of building the mine are 95%. 95% of the companies that set out to build their first mine succeed. And you can make substantial gains on that. I've been told I shouldn't have published this. I should have made it my secret formula for success. But I was so excited when I made this discovery, that I published it, and then the cat was out of the bag. And so it's out there. And besides, if I kept it secret, but my picks were always in this pre-production sweet spot, it wouldn't have taken long for people to figure out, oh, I see what he's doing there. So anyway, I've just decided to make it public. I publish my findings every time I update the data. We have only a few examples to add for last year, but it's going to be time soon to update the data again. It'll be interesting to see what changes, if any, there are in the average numbers.
Yeah, no, but I think this granular industry-specific data is super interesting, and I'm sure if it shifts where the value is, you'll find it again. So you can publish.
It might go up. There were a couple notable big wins in this space. I'm not going to name names again, but there's one company I can think of that just hit it out of the ballpark in the pre-production sweet spot, almost exactly with the calendar year last year.
And sorry, just real quick, how does that happen? Is it, sure.
Just real quick, I have my latest report on this is available for free download. If you go to independentspeculator.com, I think the title of the thing on the homepage is the greatest discovery of my career, PPSS, and you can download that for free.
Yeah, and so when a company does great in this stage, is that because they get it built on time, on spec, and they don't dilute much, or do they accidentally find additional deposits? Or
that's a really, really interesting question, and I ask about this in the report because it's not what you might think it would be. And here's the thing: is out of this entire database of all these different examples of first-time mine builders, there's a half a dozen of them that are like head and shoulders above the other. That their average gain of the top 5 in the data set is on the order of 700%. Not quite a 10-bagger, but it's up there. And so this has been something I've been researching now for years, like what distinguishes those top 5 from the rest? Mm-hmm. And if you do a scatter plot, like you'll see this thing, of going up, and then there's the top 5 up here. What distinguishes those? And it's not gold versus silver. It's not NPV. It's not the value of the project. Like there are big ones and little ones. It's not IRR. There are no projects with terrible IRR, but there are high and low IRRs in there. It's not even political risk. One of those top performers is in a dangerous part of Africa. So it's like all the things you might think would predict or would make for a better bet are not there. I have some theories. One of them is I don't know that I'll ever have a number or a measurement other than my personal sense, but one of them is actually promotion. Like the guys or gals just do a better job of getting their story out there. And they tell an exciting story. And there's pictures of, here's our new mining trucks, here's our new tunnel, here's our progress. And if they're telling an exciting story, and investors, they see that mine's coming, they see that the cash flow is coming, they get excited. So that doesn't always work, but it does seem to me that the high performers tend to be effective promoters. And I know promoter is a bad word for some people, but it's an important function for a public company.
And is that because they get their companies financed at a better rate to build out those mines?
So
Or?
that's not a PPS answer, but in general, yes. I mean, one of Doug Casey's famous P's of resource stock evaluation is actually promotion. And mining company guys or gals, sorry, they often get offended if you say, "Oh, that's great promotion." Like, "Oh, I'm not a promoter." Promoter means like a bullshitter, right? A guy who's promoting a story and not solid facts. But there's so many companies that are run by these engineers who think that the numbers will speak for themselves, right? All I got to do is have great technical results, and everybody will love my company, and it doesn't happen. And personally, I think one of my greatest excitements is when I find a company that has these great numbers that the market completely missed because there's nobody telling the story. And I can help get that story out there. I can maybe push the company into getting their story out there more effectively, and then the company gets revalued. So but that's not a PPSS specific thing. That's just more general. I think promotion actually is an important part of the business, as long as it's honest, as long as it's truthful. That's fine. As for the and then yes, that helps a company raise money, right? There's nothing wrong with a company getting its story out there and having its share price rise and being able to raise money with less dilution for existing shareholders. That's a good thing for me as an existing shareholder. Nothing wrong with that at all.
All right. And so it's not coming from like finding additional like deposits and stuff like that. Yeah, so
there are examples where additional resources are discovered, but and you might think, okay, well, they're building the mine, it's going to get boring. We need exploration drill results to keep investors excited while we're building the mine. But no, actually,
that's not what happens.
Of the top 5, I don't think any of them were driven by exploration success during the mine construction.
All right. Hey, and then let me ask. You're also interested in like silver mines, in silver miners. What kind of stages of companies do you prefer, or do you maybe,
Well, so as we spoke earlier, I'm at a phase of my life where I'm looking more for wealth creation than wealth preservation. So my tendency is to look for earlier stage, not early grassroots stage. That's very high risk. And some people love that. Some people, they want to buy some penny stock that makes a discovery and goes up 20 to 1, 50 to 1. This actually happens, right? People talk about how, once in a lifetime Bitcoin is. This happens every year in the mining space where something goes up like Bitcoin has. But there are thousands of stocks out there, and not even my mentors or the best people in the business know which one is going to make that discovery that's going to deliver those kind of, 50 times or 100 times winners.
Yeah, and I love the others as zeros, right? They're
yes. So frankly, I don't even try. I mean, if you have to cast a very big net, you have to buy like hundreds of stocks and hope one of them is going to do this and offset your losses on the other garbage. I hate losing money, and having just started a new business, I couldn't afford to have a bunch of losses on my track record. So I focus very much on companies that I thought had very good chances of winning, not just might win, but actually had at least better than 50% chances of delivering a win. I just was not interested in losing money. So that meant no very early stage exploration. That meant success in progress. And that means I didn't get in on the early stage big discovery rise. But between that first discovery hole and drilling off millions of ounces of gold or silver, there's a lot of upside there. So I'm perfectly happy to jump on to what I call success in progress. There's an article on that too, available free on the website, Success in Progress. You can Google that. But to answer specifically for silver, so my general view, and whether it would be copper, gold, or anything, is I'm looking for not super early stage grassroots, but early enough stage that I can benefit from the big ramp up as we drill off a big discovery and deliver value to the market. And then the PPSS when you build the mine. And then you're in production, you have to worry about, a profitable business, whole other different business. I tend generally to avoid the producers unless they have like some huge growth, like they have some mine here and they're about to double it with a new one or something. But generally, I'm in the earlier end of the spectrum. But with silver, it's different because there are just so few primary silver stories. So really, with silver, any great company will do. It can be a big one, it can be a medium-sized producer, it can be earlier, an exploration play. But it has to be one that I'm really excited about. It has to be one I believe in the people, I believe in the project, I see success and progress, or I see assets that are going to deliver for shareholders. And if I see that in the silver space, I'm willing to invest. And if I don't see that, I'm out.
And there's actually what do you think about like the royalty companies? And there's like a big one, wheat and precious metals in this. That's for a large part is the silver company. It used to be called Silver Wheaton.
That's right.
But there are many in the gold space.
Yes. So I love the royalty business model. I would caution that, it's become like a flavor of the day, and there's people starting up a new royalty company, it seems, every week in the mining space. And not all royalties are created equal. So like with any company, I like, there are some that are early stage plays where they're assembling a portfolio, and it's a growth story. So you're not looking for business fundamentals and, a proper PE or something like that. You're looking for growth. And so if you have earlier stage ones that have at least some key cornerstone assets, something you can hinge some value on. Like I would not invest in a royalty company just based on the idea. But if they start the royalty company with a cornerstone royalty that either is cash flowing or is obviously going to be a cash cow for them in the future, and they have a plan for growth and they are visibly executing on that, that would be the equivalent of exploration, successful exploration, but in the royalty space. I'm willing to go there. Not super grassroots, but success in progress, building a royalty company. Beyond that, though, like with producers, I'm not interested in a producer if they're not delivering to the bottom line. I want to see profitability and growth. And there are enough of them out there that I don't need to sacrifice one or the other, right? I don't want to hear about profit in the future. We're growing now. If you're an existing big royalty company and you can't make money, then sorry, you've got crappy royalties. I want to, sorry, that's a technical description. So,
yeah. And
sorry, one more thing.
Yeah.
There are a lot of people that are out there acquiring, just buying royalty this, royalty that, royalty this. If that royalty is on a grassroots project, that royalty is not going to cash flow for a long time, right? Copper is all the rage right now. If you acquire a copper royalty on an early stage project, it could be 20 years before that cash flows. The copper price could go up and down 3 times before that thing ever cash flows. So I would give that company 0 for that kind of royalty. Now, if the royalty has a deposit, but it's very low grade and it needs higher copper prices or something, that's not a quality asset in my view. I mean, copper land banks are fine, but as a royalty pay, you're never going to get paid on that royalty. So due diligence matters here. You need to look at the kinds of royalties. For the bigger royalty plays that are not just a pure growth story, I think they should make money. And I think their growth should be on assets that are either like in construction or are visibly approaching cash flow.
All right. And so what I'm observing as an outsider of the industry is that a lot of these royalty companies, they get kickstarted by a big package of, let's say, royalties of a major that they are not really using, or not even majors, but also the medium-sized companies. And they get a much better multiple within a royalty structure. So they're sort of creating value. And
yes, and the selling or the company that spins it out, they have shares in that, so they get more value. Right. Yeah, I get that. And that's generally, I would say, the preferred plan, especially if it comes with producing assets. You have that start. But then remember, it's profitability and growth, right? So if you get this portfolio, but then you do nothing, or you have no ability to bring in new royalties and grow the business, then that's kind of boring for me. That's not going to do it for me. And so to the point of what you're saying, that time when they spin it out and they set it up, that's great. But that's too early for me to get in. I want to see, okay, they've been set up with these cornerstone assets, and management is showing an ability to execute on growth. Like they're buying new packages that are immediately accretive, not just, blue sky for some time in the future.
Right. And do you think it has made mining perhaps a little bit less risky because now you can finance through these streams and these royalties, where before maybe you had
I
to
think it's
take
a
on more
good thing
debt?
for the business overall, to have that alternative. There, particularly, you could have a great project and just couldn't find a bank to finance it, and you didn't have the
Yeah.
money. And now there is an alternative. That said, there is potentially risk here too, because if you have these royalty companies financing projects the banks won't, that tells you you're going farther out on the risk curve. And okay, if it's some of the big royalty companies that have been doing it for a long time, they know their stuff as much as the banks or better. So I'm not too worried about them. But the new companies, right, and the smaller companies financing mining projects, I think it would be prudent to assume that greater risks are being taken, and that is something to be cautious about.
Right. Okay. That's good points. Interesting. And let's see. You really don't like small mines, right?
The way I look at that is, if you have a small mine and it makes money, if you're mining and you're not making money, forget it. It's absolute non-starter for me. But if you have a small mine and it's making money, then I want to know what your upside is. If you have a thesis, an exploration thesis, like say it's a VMS style deposit, a volcanogenic massive sulfide VMS deposit, those tend to come in clusters and they tend to be high grade. So let's say you have a small high grade mine on a VMS lens, but your thesis is, well, okay, we have the one and there's going to be a half a dozen more around here, or we think we know where there are half a dozen more over here, and we'll use the one to build the others and it'll be a bigger project. Well, that's a valid thesis. Then it's not just a small mine though. You're really investing or speculating on the growth from these other resources coming into play. And what makes that a good thing is that you're paying for that instead of having to dilute shareholders by going back to the market and issue new shares all the time to pay for your exploration. You pay for it out of the cash flow. So I do like small mines if I see exploration with cash flow, right? As combine the two, exploration with cash flow, and I can be very supportive of that. But if it's just this little mine chugging along and it hasn't changed for years,
Yeah, and how important is that? I think that's one of the most attractive things to me, is that mines can actually expand because they find additional deposits. Is that something that's always in your mind, or?
Well, yes, generally. So if I think the commodity is about to do a hockey stick itself, like if we were talking about copper coming in and copper's doing a hockey stick, the mine doesn't have to double its output to benefit from copper going from $2.50 to $4. Share prices will react. Right? So it doesn't have to be. Longer term though, then yes, that's what I'm looking for. That's there. So for example, vein type deposits, especially some of these narrow high grade operations, the mine has no more than a year or two of mine reserves in front of it, because it's expensive to drill off. They're narrow, they're small, and it's very expensive to drill off 10 years or 20 years of mine supply. You might spend more on that than you make in 2 or 3 years of mining. Whereas if you mine it and then you drill off what comes next, and you keep doing that, and you're successful, then you can keep mining. The silver mines in Idaho are famous for this. There's some that produce for decades or 100 years, and they never had more than like 1, 2, or 3 years of mine reserves in hand, but they mined for 100 years because the veins were, they were there, but it was never profitable to define them. And that's fine. I understand that really happens, but there is risk. If I invest in a silver miner and they only have a small amount of reserves, and they say, yeah, but we've been mining here for 10 years and we think we'll mine here for another 10 or 20 years. That might be true, or it might be that after they mine out what they have, it's gone. They got to the end of it. So I'm not saying it can't be done. I'm just saying that as a speculator with many different choices, I would rather choose one where I see, many years of mine life ahead of me that will give me time to benefit if we get one of these hockey sticks in metals prices.
All right. And are there besides silver and gold, are there other metals that you're real interested in? Are you in the general commodities or?
I'm a general commodities bull now. I do think, I don't want to sound all clear, it's safe to go back in the water, all the sharks are dead. Notice, because there are these new mutations of the virus. It is possible. It is possible that we see more downturn here, and that could affect demand for industrial commodities of all sorts. That's still possible. I don't think that, by the way. I don't expect that. It does look like, with the virus, the vaccines rolling out and people taking the social distancing and so on more seriously, it does seem like we're getting ahead of this thing. But I just have to put that out there. It's possible. But that aside, I'm bullish basically all commodities. I'm especially bullish on the key industrial metals, and I'm particularly bullish on copper and nickel. Both of those, unlike say lithium, which is very common, there's no real supply constraint for lithium. Both nickel and copper have structural supply issues going forward many years. Both of them are key industrial metals, and both of them are also key for the new energy paradigm as well. Like these lithium batteries have much more nickel in them than they have lithium in them, and these cars and the turbines and all this stuff needs lots of copper for the wiring. So I like those a lot. And I also like uranium, and uranium is very different. People hate it. They associate it with nuclear accidents, nuclear weapons, whatever. But a substantial portion of the world's power right now comes from nuclear generators, nuclear reactors. And you can't just pour gasoline or beer or whatever in the reactor and get energy out of it. It has to be uranium. And it will take decades to replace that power. And at the same time, you've got China and India, other places building more nuclear power plants. They have serious pollution problems. They know it, and they're building. So we're actually, despite how feared and hated nuclear energy is growing worldwide, and there are different technologies being developed. But right now, all of these reactors, all of them require uranium, and the current price of uranium is less than what it costs to mine it, generally speaking, around the world. So I see that actually as a very bullish opportunity. The one caveat is if there was another Fukushima type event or Chernobyl or something, obviously uranium prices would tank, uranium stocks would tank even more. I can't say that will never happen again, but I don't expect it. And if it doesn't happen, if it doesn't happen, substantially higher uranium prices are as close to a guaranteed thing as exists in speculation.
Wow. Okay, that's sounds real interesting. Yeah, I think this was a great interview, and so uranium is really at the top of your list for metals to look at. Nickel,
it's
copper.
top of my high stakes list. Like I consider the uranium stocks to be the high risk end of my portfolio.
Yeah.
And so if you want to swing for the bleachers on potential 10 baggers, as we say, just gigantic winners, remember that in the last big rally from the early aughts, after the turn of the millennium up to 2007, uranium went from roughly $7 to $140 a pound. So that was 20 times just on the metal itself, let alone the stocks and the companies producing the metal. I have to say that recently the uranium stocks have, across the board, we've seen a lot of interest in this thesis I'm outlining, and a lot of uranium stocks have risen dramatically in the last month or two, while the uranium price itself hasn't gone anywhere. So, I'm not a cheerleader. I'm not just going to tell everybody, go out, buy, buy, buy. You'll never hear me say that other than jokingly. But I believe in the thesis, and I think the with due diligence and picking the right stocks and buying at the right opportunities, I think uranium has spectacular potential. This is the stuff where you're 50 times and 100 times winners. I'm not promising that, but those are possible in this space.
And is it like last few questions and I'll let you go. Are those like are there like hundreds of uranium companies, or is it a pretty
not as many, you know, by the time uranium hit 140 a pound, there were, I don't know, everybody was changing their name of their company to something or other uranium. But there are a few. I have in addition to the independent speculator, which has, you know, my portfolio, what I'm putting my money into, I have another service, a more affordable entry-level service called My Take, which isn't my stocks, it's me evaluating stocks requested by readers. So there are actually hundreds of companies in My Take, and I give a summary judgment, as it were, plus or minus, on the stocks requested by readers. And that includes more than 40 different uranium companies right now. So
wow.
I would not say that there's hundreds and hundreds of them out there, but there are a couple dozen that you can choose from.
And how many did it got a thumbs up?
Not
out of 40.
Not most of them. I think very few of them. I can tell you in just a second if you're willing to wait.
Sure. But, no, I'm curious. And
I sort the database here by uranium and by take. I got 1, 2. It was more than I thought. Out of the 41, wow! Out of the 41, there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 13 that have a thumbs up.
All right. Is that would you say that's about your normal ratio in My Take, or
no? So uranium. It's funny. I just said that uranium is the high stakes end of my portfolio. I happen to know, because I counted them recently, that there are about 55 to 60 thumbs up out of 400 or so companies covered in the My Take database so far. So like you subscribe, you get instant access to all 400 companies. And by the way, March, this coming month, is an update month. I review every company in the portfolio, not portfolio, every company in the database. So what this is telling us is that I like high risk speculations, because what we're seeing is that uranium thumbs ups are overrepresented in the My Take database. Either that, or My Take readers are really smart and they have asked me about the best companies. And a lot of them are uranium bugs asking about good uranium companies. And therefore there's an overrepresentation of thumbs ups there.
Well, it's also coming out of a decades-long bear market, right? Or decade-long.
Yes, it is exciting. And for a while last year, uranium was the best performing metal. Earlier in the year, uranium was up like 30% or something, while gold and silver were still getting going, you know, before COVID and everything. So yeah, earlier last year, uranium was getting exciting, multi-year highs, and people are starting to wake up to the story.
All right. Well, with that, I want to thank you so much for having been on the show. I've learned a lot. If people want to know more about your service or and the things that you do, where should they go?
Sure. Well, independentspeculator.com is the URL. I think it's fairly self-explanatory. You come there, there's articles you can read, there's a special report section that you can find, there's free downloads, there's an about that explains, and there's a contact form. So if you have any questions, can't figure something out, just send us a note. Most likely you will hear from me personally, because it's still a pretty small business, and I take it personally and try to care for my readers.
We'll skin in the game. It's your portfolio even.
That's absolutely right. That's the key. Skin in the game.
I'll add that I recommend your interviews. They're great. And on YouTube. Do you have a Twitter or something? Or
yes. My Twitter handle is @DueDiligenceGuy. @DueDiligenceGuy for Twitter. I'm also on Facebook and LinkedIn. And just look for my name, Lobo Tiggre. But really, it's Twitter is where I'm most active. For whatever reason, it seems to have attracted, my little quarter of the Twitterverse has attracted some really interesting and intelligent and knowledgeable people. It's actually a useful resource for me. If I don't know something, I can ask my Twitter followers, and somebody who's an expert in that particular thing will just happen to be one of the thousands of people there, and he or she will say, oh look, yeah, I have this experience, or here's the answer to your question. So I like that. There's a few trolls who want to flame me from time to time, but generally it's a pretty well-behaved and useful little quarter of the Twitterverse. I do encourage people to sign up if they want to chat.
Cool. Then thanks to all the listeners or viewers, and please like, subscribe, share, and hope to see you all next time. Thanks so much, and bye bye.